Elon Musk doesn't manipulate Tesla's stock, but he does move it. And the reason has nothing to do with conspiracies. Every time Elon Musk tweets, Tesla stock reacts. Some people call it manipulation. Others call it genius. But both are wrong. What's actually happening is market psychology, and once you understand it, Tesla's volatility stops looking so mysterious. And Elon Musk isn't just a CEO. He's one of the largest attention hubs in the entire world. Think about it. When he speaks, what happens? Trading volume for Tesla spikes. The market's reaction time collapses to mere seconds. Emotion completely overrides rational analysis. This isn't just an opinion. It's a well-documented phenomenon in behavioral finance. Stocks that are in the spotlight get bought, and they get bought fast. Attention is the new currency, and Musk commands a massive amount of it. So, when Musk posts a cryptic tweet or makes a bold proclamation, he's not secretly pulling strings. He's simply shining a giant spotlight on his company. Traders, algorithms, and everyday investors see that light, and they react instantly. The surge in activity, the rapid price swings, it's a direct consequence of where the world's attention is focused. He creates an event, and the market, being an attention machine, has no choice but to respond. But here's the thing. Tesla isn't priced like a normal company. If you try to value it based on current car sales or quarterly profits, you'll be completely lost. Tesla is priced on three things: future expectations, long-term narratives, and belief in its ability to execute on a grand vision. This makes the stock extremely sensitive to stories, not just to numbers on a balance sheet. So, when Musk talks about AI, full self-driving, or humanoid robots, the market isn't reacting to today's revenue. It's repricing the probability of a completely different future. Investors aren't just buying shares in a car company. They're buying a stake in a potential world-changing technology conglomerate. Musk's words act as updates to that grand story. A positive statement can make the distant future feel closer and more certain, causing the price to jump. A negative one can inject doubt, and the price falls. It's a stock that runs on belief. This is where a powerful concept called reflexivity comes in. George Soros talked about this a lot. It's not as complicated as it sounds. Here's the loop. First, Musk makes a statement. This statement changes the market's expectations about Tesla's future. The stock price moves based on these new expectations. Then, the media amplifies the price move, creating headlines and attracting even more attention. This shift in price and narrative can actually change reality. A higher stock price makes it cheaper for Tesla to raise capital. It boosts employee morale and attracts top talent. It increases customer confidence. So, the belief moves the price, and the price helps shape the reality. The initial story starts to become a self-fulfilling prophecy. A rising stock doesn't just reflect success, it helps create it. That's not manipulation. That's a feedback system. The narrative and the fundamentals are in a constant dance, each influencing the other. So, let's be precise about the difference between influence and manipulation. Manipulation implies a few key things: hidden intent, controlled timing for a specific outcome, and a clear asymmetric benefit for the manipulator. But look at Musk's behavior. It's public, it's chaotic, and it's often costly to himself. Think of the SEC fines, the massive drawdowns in his own net worth, the self-inflicted volatility that gives his critics ammunition. That's not the behavior of a controlled operator trying to secretly enrich himself. That's a powerful signal generator in a very fragile, interconnected system. The has immense influence. Yes, but influence is not the same as manipulation. One is broadcasting to everyone. The other is whispering in a chosen few's ears. So why does the stock react so strongly? There are three key amplifiers that make Tesla's stock so sensitive. First, high retail ownership. A large portion of Tesla stock is owned by individual investors, who tend to be more influenced by narratives and emotions than large institutions. Second, it's an options-heavy stock. This creates something called a gamma squeeze effect, where small price moves can force options dealers to buy or sell large amounts of stock, which dramatically amplifies the initial move. And third, the investor base is incredibly polarized. You have the true believers who think Tesla is the future, and you have the staunch skeptics who think it's all a house of cards. In a system like this, small narrative shocks create huge price swings because they activate these opposing armies of buyers and sellers. Tesla's market isn't broken. It's structurally designed for volatility. So here's the practical takeaway for you as an investor. You have to treat Elon Musk's statements as volatility events, not as absolute truths. You need to learn to separate the short-term narrative from the long-term execution. Does the latest tweet actually change the company's ability to build cars, develop batteries, or write code? Most of the time, the answer is no. 2. If this level of volatility stresses you out, then Tesla is simply the wrong asset for you. The market isn't being manipulated. It's reacting exactly as psychology and its own structure would predict. Understanding this is the key to navigating it. If you want more clear, non-hyped explanations about how markets really work, make sure to subscribe and let me know in the comments. Do you think narratives move prices more than fundamentals? Thanks for watching.